Accounting firms are being reshaped by AI, private equity, consolidation, new operating models, relentless pressure on margins. AI and automation is stripping out a lot of the entry-level work. Firms are changing more often, more quietly, and with less warning than they used to. Leaders notice something different entirely because hiring decisions are often weighed against a future plan, not a current demand. The hiring decisions reveal strategy earlier than any other internal presentation will give you. The real risk in firms is not the change, it's being surprised by the change. And you don't want to be surprised. As we always say on this show, it doesn't really affect the people who can stay visible, stay adaptable at whatever the level. Let's talk about how to read the signs that your accounting firm is about to change. If you work in a firm today, there's a good chance you already know when something's about to change, and there is a lot of change going on. It's not because anyone tells you explicitly, but because you feel the atmosphere shifting, because meetings feel a little bit different, language changes, people act slightly out of character, rumors start going around, the whispers, decisions feel half-made, and this feeling shows up differently depending on where you sit. If you're early in your career, you may be sensing it as uncertainty, whether to go into accounting or whether you've made the right decision. If you're a manager, senior manager, you've got some years under your belt, you may feel it as pressure and tension. If you're a partner or owner or leader, you're at the top, you may feel it as a constraint. And most professionals don't get blindsided by announcements about change. They get blindsided by how long it's quietly been underway and they have to react to it. And right now, this matters more than ever. Accounting firms are being reshaped by AI, private equity, consolidation, new operating models, relentless pressure on margins, talent pipeline issues, compliance work is changing, regulatory landscapes are changing, advisory expectations of clients are changing, middle layers are thinning out, AI and automation is stripping out a lot of the entry-level work. It means firms are changing more often, more quietly, and with less warning than they used to. And when that happens, the signals matter a lot more than the statements. This is Accounting Voices. I'm Rob Brown. It's the show where I help accountants, firm leaders, and people coming into the profession make sense of what's really happening inside firms and in the wider ecosystem so you can stay relevant, informed, and in control of your career while the ground may seem as if it's shifting beneath you. In this episode, I want to walk you through 7 signs, that your firm may already be preparing for change long before leadership makes anything official, and what those signs mean, whether you're building your career, leading teams, or steering the firm itself. Because if you are at the top, you've got to be mindful of how your messages are landing and what people are feeling underneath you. And I'm not talking about rumors here. These are patterns. These signals are patterns. And once you recognize them, you probably realize you've seen them before. The first sign is a change in leadership language. So leaders talk less about small improvements and tactical everyday stuff, and they start talking about bigger things, future-looking things like transformation, alignment, integration, platform, scale, strategic options, capital investment, next phase. If you're not in leadership, this might sound a bit vague and harmless, and you just carry on with your job regardless. If you are in leadership, you know these words carry a lot of weight. And when leaders talk about the future state of the firm rather than the current one, we know that change is afoot. Decisions are already being made because the language always changes before the structure does. I've seen this repeatedly ahead of mergers, private equity deals, capital investments, restructures, leadership exits. The words soften first, and then the reality follows. And if leadership language is moving forward in time, business as usual is already over, even if no one's said it out loud yet. The second sign that things are changing in your firm is a shift in partner behavior. Partners always know more than they say. So instead of listening closely to what they tell you, watch how they behave. You may see things like closed door meetings on the increase, travel ramps up, partners suddenly take an interest in systems, processes, or project work that they previously ignored. Smaller groups meet without the managers present. And for staff and managers below them, this often shows up as confusion or distance or radio silence or being edged out. For partners, it shows up as guarded conversations, limited options. The partner group, the executive board, is often like a weather system. When the pressure changes, the winds shift before the storm arrives. So if partner behavior feels different, it's because the conversation at the top is already moving fast. And what you're seeing is not indecision, it's discretion. They're picking the best time to let people know. The third sign is changing hiring patterns. So firms preparing for change quietly reshape their talent footprint, their resources. Resource management is an increasingly important role in professional firms. And if the talent footprint is changing, graduates and students often notice it first because there's fewer roles, fewer opportunities, slower responses, less certainty, more hoop jumping in the recruitment process. Managers notice roles staying open longer, more open vacancies, workload stretches, teams thin out. Leaders notice something different entirely because hiring decisions are often weighed against a future plan, not a current demand. So you might see hiring freezes appear with no real explanation, or roles stay open longer than usual, or contractors are brought in instead of permanent hires, or sometimes you see the opposite: sudden hiring in advisory, digital, AI, transformation, or integration roles. The hiring decisions reveal strategy earlier than any other internal presentation will give you. Accounting firms hire for the future that they're moving towards, if they're smart, and not for the past that they're leaving behind. The fourth sign to look out for is a spike in technology investment. Big change requires new infrastructure, new technology. And when firms invest heavily in AI tools, workflow platforms, data systems, reporting technology, and you don't get much explanation, it's really about efficiency on its own. For junior staff, there's anxiety around staying relevant because you want to be on top of the tech, you want to know what's coming, and you are the tech natives. For managers, it feels like role definition and the tech is changing around you. There's so much uncertainty. For partners, obviously, you're thinking about scalability and valuation and control, maybe even exit. But technology is always a leading indicator when you look at spend. Big capital investments in tech, strategy follows behind it. And if you're moving systems, moving away from legacy, bringing in new technology, it's a warning sign. If systems change, the roles change next. The fifth sign to look out for is a shift in the client mix. Maybe large clients arrive or leave. Client concentration might increase. Service lines quietly change emphasis. Different product lines coming in. Staff feel like this is different work. Managers feel like it's different expectations. The partners feel like it's different economics. So these client economics drive partner decisions more than internal sentiment. And if you sense that client expectations and client mix is shifting, then changes afoot. When firms win or lose a handful of significant clients, if they're winning them, it means they're moving into different markets and there's obviously a shift. If they're losing them, same. They are jettisoning some of those clients as they move. Strategy shifts to protect revenue, to protect margin, to protect valuation. There's so much buying and selling of firms going on. And all of this triggers restructuring, mergers, new ownership conversations. So watch the clients, listen to the clients. They'll tell you where the firm is going, sometimes before it's discussed internally. The sixth of these seven signs to look out for is the appearance of new senior faces, strategic hires, transformation leads, integration directors, external consultants, new COOs or CFOs or new CXOs, and they start appearing in meetings and you don't get too much context. And it's hard to see this happening unless you're actually in the office, because in these Zoom and Teams calls and this remote working, you are a little bit out of the loop. It's intimidating if you're in a junior position, destabilizing even. For partners, obviously, it's unavoidable. These people might even come in above you. And these roles don't exist to explore options. They're probably here to execute decisions that have already been made. If new senior people are appearing quietly, change is already in motion. The seventh and final sign is a changing culture. There's a lot of great people out there speaking about culture. It's hard to drive culture when people are remote, but it is a really important fabric of a firm. And it's the hardest to measure, but sometimes the easiest to feel, because culture's soft, isn't it, in many ways? But if you sense that communication's becoming vague, timelines are slipping, you're filling out of the loop on things, long-term commitments quietly stall, people are a little bit more guarded, then change is coming. Graduates and managers notice the silence and the caution and the hesitancy. Leaders notice that trust is thinning. And when trust is thinning, buy-in becomes more difficult. So culture always shifts before structure does. If the atmosphere feels different, folks, it's because it is. Reading these signals doesn't make you paranoid, it just makes you more prepared. And that's what we try and do on this show, is to get you ahead of the game. The real risk in firms is not the change, it's being surprised by the change. And you don't want to be surprised. So you've got to start reading the tea leaves, looking for the warning signs, and change, as we always say on this show, it doesn't really affect the people who can stay visible, stay adaptable, Stay connected at whatever the level. We want to inoculate you against change. We want to insure you against change so you're in the best possible position. You can't avoid change. Change often harms the people most who wait to be told what's going on. So to finish, here are 4 quick things you can do regardless of where you sit in the firm. First, strengthen your internal network. Relationships matter most when the formal structures are in flux. You need to find your allies and your champions and align yourself with them. Second is increase your visibility. Be present in the firm. Be the one that helps others make sense of what they are sensing, and speak clearly, add context, and stay ahead of the game. Stay informed. Third, build your external relevance. I talk a lot on this show about visibility. It creates influence, credibility, authority, and you've got to build it outside your firm and build a personal brand in the industry, in the sector, in the location, in the community. It gives you options. It gives you career capital, and that gives you security. And fourth, finally, keep developing your advisory skills and your technology skills. You've got to stay up to date. And we know that the people who rise during periods of change are the ones who can explain and guide and communicate through the uncertainty and use the tools. You can't be off ChatGPT at the moment. It's changing the game, and insert your own large language model there. Look, in closing, your career is not determined by what your firm does next. It's going to happen with or without you. It's determined by what you see coming and how you can position yourself before it arrives. So read the signs, stay aware. You will always land stronger. This is Accounting Voices. I'm Rob Brown. See us on YouTube and all your podcast apps. We'll see you on the next episode.